Hello, everyone. We're live today in Profit Talks, and we'll talk about the curious prehistory and the future of Bitcoin and everything about Bitcoin that we can have today. And we'll be back right after the countdown.
Ladies and gentlemen, may I have your attention, please? This is a global transmission. Hayek will be live in 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Enjoy the show.
All right, and today my co-host is Leonardo Conde from Espírito Santo, Brazil. He's a consultant of public relations at Suzano and also a student of Hayek Global MBA. Welcome, Leonardo.
Thank you. It's a pleasure to be here.
And our guest is Emile Phaneuf. He is an American economist living in Florianópolis, Brazil, and a member of Mont Pelerin Society, which was a society founded by Hayek. And he's also an expert in cryptocurrencies and Bitcoin. So please welcome Emile Phaneuf.
Thank you very much. Pleasure to speak with you today.
All right. So to kick off today, Emile, I'm very curious about some topics that you have written about and what you say on the prehistory. How Bitcoin came about to be, and it's the prehistory and some of the philosophical origins of Bitcoin. Could you just quickly run us through that?
Sure. So the philosophical and the economic are pretty intertwined. On that front, the Austrians, they have a long history of talking about sound money, and the Austrian economists, not necessarily from Austria, but through the School of Economics, beginning in Vienna, beginning with the work of Mises and Hayek, and then later Rothbard and people like that, as well as some people that they influenced, for example, Ayn Rand, who was not an economist, but a moral philosopher. So on one hand, you've got economists talking about sound money and different ways to achieve this, whether so people like Rothbard and Mises certainly promoted a gold standard. Hayek liked gold fine, but he saw it as what he called a very wobbly anchor. If the goal is to protect individual property rights against threat of inflation, which is a tax without going through the traditional means to tax. And it from his point of view and mine too, you could say, is sort of a pernicious way to tax people, the citizenry. Hayek's way of sort of approaching this sound money is he's got a book that he published in 1976, a couple years after he won the Nobel Prize, called The Denationalization of Money. And in that book, he has both a proposal for how it could work, plus he has sort of maybe you might call it a forecast of sorts of how he thinks. His proposal is that money should be able to compete even within the same jurisdiction of a nation state. Different private competing currencies should be allowed to even compete against, let's say, whatever the fiat currency is of the nation state. But he also has a sort of a forecast of how he thinks that would work. So in that point of view, he doesn't think it would be necessarily a gold standard that would win the day. What he hopes would happen is that banks could compete against one another, and they could have a currency backed by some asset, a basket of goods of various sorts. And he sees a role for the media, like newspapers and so on, to be watching the purchasing power of a currency over time, and if they notice that any of these banks are sort of losing their purchasing power of the currency they issue, that the media could sort of keep them in line by exposing them as, hey, this bank over here, their currency is it's losing power against these basket of goods and so on. I don't necessarily take the view. I mean, I'm happy to just take his first thing, which is his not necessarily his prediction for how he thinks it would work, but his proposal for competing currencies. So that so that sort of the Austrians, as well as an economist, David Friedman, who is not an Austrian. He's of the Chicago School of Economics, son of Nobel Prize winner Milton Friedman, and sort of you might say a philosopher of sorts in anarcho-capitalism. In anarcho-capitalism, there's like two main old school people that sort of developed the theory behind it, being Murray Rothbard and David Friedman, and at least in the 20th century. And it was so these economists and philosophers inspired a group of young, probably 20-somethings at the time, probably university students, called the cypherpunks. And these cypherpunks were students of computer technology, mathematics, cryptography, and they went on to, they had a list, an email list during the 90s, and they talked back and forth about how they could build, borrowing the concept from Ayn Rand, a Gulch in cyberspace. Huh. So if you read Timothy C. May, C being the middle initial, Timothy C. May, he managed the email list for, I think, most of the time, most of the 90s, and he talks explicitly about this Gulch in cyberspace, where people could get away from the coercion of the state and transact with one another in cyberspace, and using cryptography, so the nation state wouldn't be able to see or basically see what they're doing, essentially. So the idea was to eventually come up with a working, hopefully decentralized digital currency that nobody controlled, that would be internet native, meaning that it's not asset backed in the real world, because if it's asset backed in the real world, for example, backed by gold, then the nation state could shut it down because the nation state really dominates real space, but struggles to dominate cyberspace to the same scale. So that's what they had in mind.
That's very, very cool. I never had this image that, all these economists and philosophers that we're so acquainted in the Austrian economics and libertarian literature had influenced these groups. So these cyberpunks actually had a relationship with Satoshi, as far as we know. How did that work out?
Satoshi's identity remains unknown to the public. Having said that, there's more than a fair probability that at least one of the members of the early cypherpunks and on the email list in the 90s, that one or more of them were came up with what we now call Bitcoin.
And Emile, one question that I have is, you said that Hayek was expecting a currency that banking competing with banking, and do you think that cryptocurrency is a way to compete against? Is a way to compete what in a way that what Hayek thinking about it?
So if I'm to restate that, let me know if I got it. Is cryptocurrency a way to compete with the traditional banking system and fiat money?
Yes.
And fiat money? Basically, yes. I think so. There exists two parallel financial systems. There exists the traditional one based on fiat money. I don't know of any country in the world that has a money backed by anything. There was, of course, during the Bretton Woods system until 1971, you had the dollar, which was loosely backed on gold. But as I understand it, it was only the central banks of the world that could go and cash in and get the gold. Private individuals, as I understand, couldn't do that. But in 71, when Nixon took the U.S. off the gold standard, there was essentially a rug sweep. So now you had just paper and coin money. And money existing on ledgers with the banks and so on. I sort of forgot where I was going with this, though. Oh yeah, so two parallel financial systems. So with fiat ended up being backed by nothing other than full faith in the U.S. government, but more accurately by guns, as America led the global order. Literally, essentially works that way as America sort of polices the seas and so on to keep the American empire going, and it had status and still has for now status of global reserve. And the other currencies of the world also, at least during Bretton Woods, were loosely pegged to the dollar. Some still pegged to the dollar. Some are dollarized. For example, Ecuador. For example, El Salvador. For example, Panama. They still on the U.S. dollar. Yeah. Now back to the point to your question is now that you have this Bitcoin thing, it's starting to catch on. It's not in the consciousness of grandma yet, but it's catching on more and more, and the nation states are getting more, or they're fearing it more and more, and they're trying to close the on ramps to it and the off ramps, so you can't even cash out for fiat, so you can go buy a house. If they can shut the on and off ramps, the cryptocurrency exchanges, essentially, they're doing that by essentially debanking. So having a cryptocurrency exchange is, it's regulated. It's actually highly regulated, but it's a legal activity. But regulators in the U.S., at least, led by Securities and Exchange Commission Chair Gary Gensler, they're very ambitious. They're more and more hostile towards cryptocurrencies, and they're trying to debank them. They're trying to debank the banked, right? So there's a lot of talk in the world. A lot of economists talk about how can we bank the unbanked. Well, the U.S. government literally in Europe, they're literally trying to unbank the banked for perfectly legal. Well, mostly some of the activities of cryptocurrency exchanges, they're found to be illegal, and they battle it out in court. But essentially, selling Bitcoin isn't illegal as such, for example. So they're trying to unbank the banked. You can see this with Signature Bank, for example, in the U.S., which fell after Silicon Valley Bank, or it was literally taken down. And Barney Frank, whose name is on the bill that literally what's the word? I'm thinking reformado. What's that word in English? You guys are reformed. Thank you. They reformed. Thank you. They reformed the banking system after the 2008 and 9 global financial crisis. And Barney Frank literally has his name on that bill, and he was director of Signature Bank and he said they were shut down recently by FDIC and the Fed, and he said the bank was solvent, and the government took them down anyway. And he's literally the guy who, restructured the banking system, and they went after his bank. Why? Because Signature was, I think it was the only big bank that was banking companies that had anything to do with cryptocurrency. So this follows, by the way, something that was called internally in the U.S. government at the time called Operation Choke Point, where in the latter years of the Obama administration, they went after businesses that were that were operating under perfectly legal activity, like gun manufacturers, In the U.S., that's a legal activity, regulated but legal. Some of these lending institutions and so on that get a lot of heat for their interest rates or whatever. And the Obama administration didn't like what they were doing, even though it was legal activity. So the way they went after them was not through the court of law, but coercing the banks to debank these companies. So so that's what's happening now with sort of cryptocurrencies in the United States. And there's a pretty bright individual named Nick Carter that has coined this what's happening called Operation Choke Point 2.0. So yes, here we are.
Okay.
Well, it's too much information.
It's a lot of information.
One thing that I liked is that Emile is a native English speaker, and he was forgetting words in English, so that made me feel better.
Yeah, it happens. Good here.
Go ahead, Leonardo.
One thing that's very, very curious, because the dollar is the world currency that is able to trade in the world, and he's not fighting against, but I heard and I read some movements to regulate cryptocurrency. In your opinion, what are the risks associated with trading or investing in cryptocurrency in this scenario?
Okay, so all right, so there's two ways that I have to sort of approach that. The first is, so on one hand, you have a regulatory risk because they increasingly don't like it. There's that. Second, and on that point, if you were to buy a cryptocurrency, you should hold it in self-custody, take it off the exchange. Doing that removes the counterparty risk. So don't have what's called a hot wallet. Don't hold it on a wallet that has access to the internet, like one on your phone and so on. You can buy a hardware wallet. These days, you can do it what's called a hardware wallet, and the private key remains on the hardware wallet. So you can remove that counterparty risk. Having said all that, now here's the second thing: is that there's a very big difference between Bitcoin and let's say all the altcoins, and that's it's important to point out that there's really only one that. Well, there is no other cryptocurrency out there that has anywhere remotely close to the same level of decentralization as Bitcoin. That is to say, a lot of them they have teams, developers, companies behind them, and some of them are so centralized that if the company goes away, the cryptocurrency can. And they say, it's on a blockchain. It's like, okay, how many nodes do you have? Because with Bitcoin, at least, it's the nodes that enforce the rules. So as far as, for example, I think it's not known, but nodes that we can see on the network. Last I checked, there's something like 16,000 as of right now, a little more than 16,000 around the world. Bitcoin full nodes. And these nodes you can buy a little computer, cost you $200, and you can have a full copy of the blockchain, and your little computer for $200 enforces the rules that all the miners and all the players on the network have to abide by. And so the barrier to entry to act as think about this, on the central banking level, who holds the master ledger? It's the central bank. Where with Bitcoin, the barrier to entry is so low that you can spend $200 and you are an equal peer to all the other nodes. Right, so there is no other cryptocurrency that holds anything close to this level of decentralization. So I don't advocate any other except just Bitcoin. How
many nodes does the closest competitor have? Just to have
that's a very good point. I have the next one to look at would be Ethereum, and but with Ethereum they use different terminology. They use validators, but essentially. Long story short, Ethereum is a long conversation, but Ethereum has switched from what's called proof of work to proof of stake. So essentially, Ethereum is something along the lines of those who get to run run things. And Bitcoin is not a system based on those that have get to enforce the rules, right? It's much more egalitarian. Anybody can operate on equal footing. So the rules in Ethereum are enforced by validators, and to be a validator, last I checked, it's 30 something. You have to have 30 something ether. So with the going price of about $2,000, it's about $64,000 you need to be to sort of have a level footing with the other enforcers of the rules, called the validators again. Where with Bitcoin, $200, you're an equal peer.
Okay. And what's like a rule of thumb? If we're looking like at a new altcoin, how many nodes should they have to be in the safe level? Is there any rule of thumb like that, or how does that work?
Again, I only advocate Bitcoin. I mean, feel free to look it up. I haven't looked that up, but I know people that have worked with another one called Solana, and I don't know much about Solana. I'm not here to trash it, other than a number of people that I've met over time say that one. So Solana, they'll say ours is really fast. It's really fast, faster than Bitcoin. Okay, first of all, that's problematic, because Bitcoin is slower on the main chain, on the blockchain, but you can also transact on the second level, like we call level 2. For example, the Lightning Network, and on the Lightning Network, your transactions are nearly free. And so you don't need to go to another blockchain that's really fast, because essentially they're sort of operating either. I'm not saying Solana is on a server. Again, I know less about it, but some of these are essentially just on a server, or 2-3 peers, all of them run by buddies of the person that started it, or even in the case of Ethereum. Even though Ethereum has levels of decentralization, of course it does, it still has a founder that's still alive and actively managing the project. So when he says, we should do this major change, he at least has a fair bit of influence. Where Bitcoin, I don't know if it was planned this way, but it certainly worked out great for Bitcoin's decentralization. It's just the fact that this Satoshi Nakamoto character, whoever he or she or they were, disappeared, and so there's nobody to speak with any credibility to say, here's what I really meant, let's do that. You're right. It worked out great for Bitcoin over the long term. There are competent people that submit code changes over time, but they don't, to the extent that they have any authority, it's only through reputation and by the merit of the open source code that they submit, that the consensus can either accept or reject. So even Bitcoin Core, which is the sort of core team that makes the submissions, they know that their power is limited to consensus. Either the network accepts it or they don't. And so they're very careful, very, very, very careful. The BIPs, the Bitcoin Improvement Proposals, the BIPs, that they submit as a code change, because they're just wasting their time and creating a lot of friction in the community to submit things that they know that the community doesn't want. Also, as you probably know, Bitcoin has a 21 million hard cap, meaning you can't create any more Bitcoins than that. Right now we're at like 19.3 million, working towards 21 million. Long story, but yeah, I forgot what I was going to say in that point. But essentially, nobody can mess with it. Good luck. It's a Schelling point. I don't know if you know this term, Schelling point. Sorry, there's a Schelling point of this 21 million. So there's a consensus around 21 million, and it's so engraved in the minds of any Bitcoiner. It's value prop. It's probably the biggest value proposition as a store of value. Just the fact that gold, which has been the historical store of value, you can still pull it out of the earth at 2-3% a year, on a good year maybe 5 or something, and Bitcoin, it's on a set schedule, and you'll never pull out of the earth more than that set schedule, and gold doesn't have a hard cap. Once you mine all the gold out of the earth that makes economic sense to pull out, then you start mining asteroids eventually, and Bitcoin, you just can't do it.
Yeah, I was thinking about that the other day. The the astronauts actually discovered an asteroid somewhere that has a lot of gold on it. I was
Yeah.
like, wow, if all that gold comes to Earth, there's going to be a gold inflation. Bitcoin
Yeah.
doesn't probably.
But are we gonna have Bitcoin halving this year or 2024?
Last I checked last week. I think it was the halving is presently forecasted to be in the end of April 2024. So end of April next year. But it could be as late as, let's say, the first part of May or something like that. But the way it works, so it's pre-programmed, but on average block size, and if it maintains at that average block size, somewhere close to the average block size for 210,000 blocks over roughly 4 years, and it's scheduled for the next one. So yeah, we're scheduled for one April next year. At the moment,
we have some questions from our audience who's watching us in YouTube. Let me show one up here. So Anat asks, how are Bitcoin's transactions processed and what technology is used to ensure their accuracy and security?
All right. So Bitcoin transaction on the main chain, there's two levels. Remember, there's level one, which is on the blockchain, and then there's off. But I'll stick with just the traditional Bitcoin that was launched back in 2009. So how they're processed is that you've heard of Bitcoin mining before. Miners do two things. One is they try to they do two things by doing one. They try to solve very complex mathematical problems, and when they successfully guess through brute force a mathematical problem, they're rewarded with new Bitcoins. But they also have another financial incentive to do that, and that is to earn rewards to scoop up transaction fees of people who spend their Bitcoins. So when you spend a Bitcoin on the blockchain, on-chain Bitcoins as they call it, if you don't leave a tip for a miner, your transaction might not make it into a block, and therefore it'll essentially not go through. But you should always, if you're spending on the main chain, on-chain Bitcoin, you tip at least a little bit, and eventually it gets scooped up into a block. So that's how they what was it? I wish I could see his question again. That's how they're processed. So I just answered how they're processed and what technology is used to ensure their accuracy. And security. The accuracy is not enforced by the miners themselves, because you can't let someone watch themselves. The accuracy is enforced through a set of rules on the protocol by people running their own nodes, even people that, again, just spent $200 for a little tiny computer that stays plugged in and connected to their router at home. So those nodes, remember I said the barrier to entry to act on equal footing with other nodes in Bitcoin is very low. This is what you would do. You would plug in a node. Your node is constantly checking the accuracy of the Bitcoin blockchain.
Cool.
Okay. I have a question as a small investor of Bitcoin. I invested Bitcoin in August 21, very, very close to its peak. My question is, will Bitcoin reach its all-time high again? But in the other hand, if we look at Bitcoin's evaluation from the beginning of this year to today, Bitcoin was $100,000 in January, and now it's around $106,000 today. Did I make a bad
you mean in
investment?
reais? You mean in reais? You're thinking Brazilian currency. I was like, wait, no, I didn't. You're not thinking in dollars. Okay, in Brazilian reais, is it? Okay, fair enough.
Yes, okay.
Yes, 5 yeah.
Did I make a bad investment? And it is okay, or it's good to invest in Bitcoin today because it's going up. Or what are your opinion about it?
Okay. First of all, I'm not a licensed financial advisor. I don't give financial advice. I have to say it. Right?
Just your opinion. Just your opinion.
I also don't do any sort of day trading or anything like that. But what I think probably would work out, just my opinion, what I think works out probably will work out for anyone that has a long-term time horizon, willing to wait 4 or so years maximum, is if you put money, of course, that you can afford to lose only. There's two ways to sort of be profitable in this. The first is you buy the dip, right? When Bitcoin's in a bear market and everybody's freaking out, you go all in like Warren Buffett on Coca-Cola.
Yeah.
You believe in it like Warren Buffett believes in Coca-Cola. All right. So that's one. The other is dollar cost averaging. So you put the same amount of money over time and yeah. So here's the thing is Bitcoin has a pretty set schedule. It's pretty predictable. It's not guaranteed to do anything specific on price, but there's a lot of psychology around Bitcoin's halving schedule. It's mathematical. We've never had this in money before, you pull gold out of the earth, and it's not certain whether you'll pull the gold out between, or whether it's going to be 1 or 5, right? You can throw a lot of money and you can dig, but maybe where you dig, you're not going to find more gold, that kind of thing. So there's uncertainty around. You can look at averages. But over time it was around 3. But there's no guaranteed schedule for gold. There's no guaranteed schedule for fiat, and there's a thing called discretionary monetary policy, and there's a crisis, and now they make the money printers go burr, right, as they say. I sort of lost my train of thought, but okay. So the halving schedule. So when Bitcoin started in January 2009, the block reward, as we call it, which is the reward that miners get for successfully solving that tough mathematical problem, they were getting 50 Bitcoins as a reward, and every 10 minutes there was another reward for whoever successfully mines the blocks. So roughly 4 years later, on schedule as it's programmed and enforced by the nodes, on schedule, roughly 4 years later, that was halved to 25 Bitcoins, and roughly 4 years after that, 12.5. Roughly 4 years later, then it was 6.125. That's where we are. No, 6. Where am I? 12.5, 6.25, and then in roughly April next year, we'll be at 3.125. So since people see that there's a lot of really funny psychology that goes into this. So what usually happens is, running up to the halving, a lot of people go, "Oh man, I better buy some now before everybody else gets the same idea," right? So you buy a bunch, or you buy some, and then it goes up, and then it does, and then other people see it go up, and then there's fear of missing out, and so they go out and they buy some, and then it really causes the bull, right? And then after a while, of course, you're going to revert to the mean, as they say. You're going to go back to some sort of new average, right? It's going to correct, as they say in markets. It's going to go down. And then there's going to be a whole psychology and then there's going to be a regulatory crackdown, and then it goes down, everybody freaks out, and then everybody realizes this is really sound money, and then they go and throw a bunch more money, and then you get institutional adoption. So if you pay attention to these 4-year cycles, again, not investment advice, but that's what I do.
Let me ask you a question there, Emile. I am stubbornly not an investor of Bitcoin, and I greatly regret not doing this in the past. But now,
everybody does.
But now looking at the future, I'm like, oh, maybe it's too late already, because it already the price already increased enough. And the reason why I don't do it is the same reason why I wouldn't invest in gold, which is it's just a commodity. And like if you think about Coca-Cola, like Warren Buffett, and there's a company there, there's a value. It's like value investing. You invest in something. You don't invest in money. I'm not going to invest in dollar, even though, okay, let's say that dollar is like Bitcoin, which is in the end of the day, it's like a currency. It's a perfect currency, which there's no risk of inflation in the sense that we have in the fiat money, but there's no value on it, other than just being there and being perfectly incorruptible. So what would you say to me? Would you say that, like, would you convince me to invest in Bitcoin and have a different type of thought? Or what's the idea there?
Sure. Yeah, there's different things like if you buy a house, you can live in the house. You buy Bitcoin, you can't live in the Bitcoin. I'd say if you look at the sort of the properties of money, you've got durability, divisibility, portability, scarcity, and then you add a new property of money that never existed before until Bitcoin, and that's programmability, right? It's a new property of money. Is Bitcoin? Then I don't think I said fungibility, but that's usually fun. The extent to which it's fungible is another one to throw in here. Is Bitcoin scores very highly on these. If you don't like gold, maybe you won't like Bitcoin, because people historically gold did well because it did well on enough of these, right? So where gold wasn't very portable, so it didn't do well on that, and it also had it had counterparty risk. Bitcoin, if you store it securely, it doesn't have counterparty risk, and it's the most portable money. I live in Brazil, and I have bank accounts in other countries, and I move money around between them. And when I use the traditional banking system, it's it's a process, and they've only come around in recent years to where I can sometimes get money, moving money from North America to South America. A few hours later, that because Wise does that, and PayPal works okay, but with paying a hefty fee. Where Bitcoin, it does transnational or international transactions seamlessly easy because Bitcoin exists everywhere and nowhere at once. It exists on the internet, so you don't send Bitcoins from one country to another country. The network receives notification of your transaction as quickly as it does if you were to send an email to someone else's server, right? So
in essence, it's like, as I said, it's like gold, except it's better than gold because it's everywhere and nowhere.
In some key ways, it is. And of course, gold, in order to verify the authenticity of its quality, right? Its grade. That's a very expensive thing to do. Where Bitcoin, your $200 node at home has a full ledger, and you don't have to trust someone else's node. You can trust your node.
Yeah, I've thought about that. When you're going to invest in gold, usually you buy like a certificate of gold in the bank, and then you leave it there. I'm like, well, that's not that good, because if the bank if the bank fails and the whole institutional financial system here fails, that's why I would want gold, because it's a store of money. And if I'm buying the certificates of gold, it's no good. But I guess the Bitcoin solves that kind of problem. Right?
Yes, and let me say that Bitcoin specifically, it is a very radical form of property rights that never existed to the extent this extent before. That is because to own Bitcoin, you know something. Right. So that's not the case with, I can break that down, but look at gold. You go to gold, doesn't matter what you know. Gold exists in physical form. So if the nation state or a common thief knows where to get it, and he can muscle you around, he can get the gold. Or if you hold any significant amount of gold, you probably keep it in a safety deposit box or in a vault somewhere, and then the nation state can go to the bank or the vault and say, you're a registered company and this person's wanted for money laundering, et cetera, hand over the gold, and then you lose it. Where Bitcoin, again, the most radical form of property rights that has ever existed, you know the private key. If you hold it in self-custody and not leave it on an exchange, you're the only one that knows the private key, and you don't share it with anybody ever. And if you even don't trust yourself, you can do something called multi-sig, or multiple signature, where you have multiple private keys, and you can set it up on, let's say, 3 of 5. So I I have it. In order to spend the Bitcoin at this address, I hold a private key, and I give it out to 5 people. And I know that probably none of them will collude, but if they're going to collude, at least 3 of them have to put the private keys together in order to unlock the Bitcoins. So you can set up all sorts of fascinating arrangements, and you can make sure that each person's in a different jurisdiction so that none of them can be coerced by the same nation state to fork it over, kind of thing. So you don't have this level of property rights anywhere in history, in anything else.
What if I die and I lose the...
Well, you can make sure that your significant other has it. You can. There's one gentleman I know. He doesn't want his wife to be able to run off if she ever gets irritated with him. So he created a multi-signature arrangement to where either he can spend it with his one private key, or his current wife and his ex-wife would have to collude together, and he knows how much he knows how much they hate each other, so they wouldn't do it unless he's dead. So that's his other arrangement. So either he can spend the Bitcoin with just the one key, or the current and ex-wife who hate each other would have to, and they both have a key, and if they put them together, then they can spend them. So you can come up with all these sort of fascinating ways to make it work.
Crazy.
And do you think that, do you believe that cryptocurrency will evolve in the future in terms of security? For example, okay, I totally agree with you that if I have gold at home, or a gold certificate, someone can come into my place, steal me or anything else. But in the other hand, we see a huge movement towards artificial intelligence.
Mm-hmm.
If, for example, have this number or this serial numbers that represents my Bitcoins,
Private key.
Private key
Mm-hmm.
that I must have it myself, maybe in my mind. But is there any risk with the this growing artificial intelligence that I'll have the same risk to be robbed as I am in the ordinary way? Someone coming or robbed me. I don't know if I can make myself clear.
Yeah, can AI be used to steal your Bitcoin?
Yes.
It's a matter of probability. I know less about that. I sort of rely on people that I know that are way light years ahead of me in mathematics, and speak with these kinds of people, and who are also Bitcoiners, so they also know Bitcoin. I've been told that I guess quantum computing could be a threat in the future, but it's we're not there yet. Here's the thing: is that if you need to make upgrades to Bitcoin, you can do. Just as long as you get a consensus around your changes. So as that happens, if you if you learn that quantum computing is, I don't know about AI, but let's say quantum computing with AI or something, I don't know, beyond my competence here. But if a quantum computer is really good at let's say brute forcing the SHA-256 hashing algorithm that Bitcoin uses, you could have it bounce around and skip to another hashing algorithm or something along these lines. Now, I admit that this is where my knowledge base gets a little limited, so I am happy to point that out.
I have 2 questions here from our audience that I believe they go together, so I'll put both at the same time. First one is George Marcoli. He asks, how has the mainstream media covered Bitcoin over the years, and how has this coverage influenced public perceptions of the cryptocurrency? I'll show the next question just so that we can optimize our time here, but I think they go together. So Anat asks again, how does the increasing adoption of Bitcoin and other cryptocurrencies pose a threat to traditional financial institutions, and how should banks respond to the new competitive landscape? So the first one is asking about how has the media covered this thing, and how has it covered the public perceptions of it? And now we're asking here.
Let me do that one first.
Okay.
Only because I know my mind, and go all over the place. So I have to do it.
I'll keep them over here so you don't.
Yeah. So generally speaking, if you're not within the niche Bitcoin, well, okay, so there's a couple things going on there. First, you mentioned Bitcoin, and then you said cryptocurrencies. There are a lot of scams in the world around the Bitcoin or around the cryptocurrency space that somebody hears about some cryptocurrency somewhere that had a rug pull, and if somebody's the project got shut down, or we found that it was a lot more centralized than we were made to believe, and then coins get stolen, or there's a pump and dump where along on the bull run that usually follows the Bitcoin price around the halving, the altcoins they go up around the same time too, and you find out during that the people that started it they sold it all, so there's they sell all theirs, and so that's a pump and dump. So people think that people hear about things that happen in cryptocurrency and they think it's Bitcoin. So Bitcoin doesn't have a centralized. There's no development team that speaks on behalf of anybody. It does have what's called Bitcoin Core, which are the people that make most of the changes, but they have. If the community doesn't accept the changes they propose, they don't get it implemented. It's just period. So you have to be careful when you say Bitcoin, then you say cryptocurrency, and you're including a lot of scams, frankly. So there's that. How the media has covered it, there's if you look at Bitcoin news sphere, it's all bullish even during the bear markets. And if you look at the mainstream media, it's usually fairly negative, and I think disproportionately negative. And there's something called, I think it's called the Bitcoin obituaries, where every year or so is some big, highly respected institution like the European Central Bank will predict Bitcoin's demise by next year or something, and then it never happens ever. And there's a long list of everybody predicting Bitcoin's demise. The latest one, it's not a prediction, but the latest one with Greenpeace. My perception is that Greenpeace is being paid by some, I won't mention a name, but being paid by some activist billionaire to attack Bitcoin from an environmental standpoint, and say that we need to change Bitcoin's code so that we can't do proof of work. Good luck with that. No, it's not possible. There is a way to change Bitcoin's code. Is you submit a BIP, a BIP, a Bitcoin Improvement Proposal, and with code, you have to submit the code and say, here's what I want it to do, specifically this, and the community either consensus picks up or it doesn't. And any ambitious little thing that people propose never gets picked up, right? and if yours is ambitious, by the way, if yours is ambitious in a way that the community doesn't accept, you get what you want. Congratulations. But the community doesn't go with you. You get what's called a hard fork. So you get your one. So Bitcoin Cash, this is another one that led by Roger Ver, and he says this is the real Bitcoin. Yeah, well, nobody agrees that that's the real Bitcoin. So congratulations. And everybody else stays with the Bitcoin.
I think we have a connection problem.
Yeah.
I'm not seeing any video. You're back. You guys hear me and see me?
Yep. We're good now.
Yes.
Okay, so how does that shape public perceptions of Bitcoin? Well, here's the thing: is once you Bitcoin is like when you get into Bitcoin, like almost every new Bitcoiner becomes almost all of them. They become a walking advertisement for Bitcoin. Once you really get it, once you've been orange pilled, as they call it, to borrow from the Matrix, red pill or orange pilled. Once you get orange pilled, you're a walking, talking advertisement for Bitcoin. Now, a lot of that talking about Bitcoin is dogmatic. I'm not going to say I agree with every Bitcoiner on things they say once they've been orange pilled. There's a lot of, when you look at it I come at it from an economist point of view. So I like poking holes in Bitcoiners' arguments and like, I love Bitcoin too, but you're wrong and you're wrong. Right. But anyway, yeah.
The next question here was, does increasing the adoption of Bitcoin and other cryptocurrencies pose a threat to traditional financial institutions? And how should banks respond to this competitive landscape?
Okay. Yeah. Well, first of all, it does, because people wake up to the fact, especially, here's the thing, is that I think the central banks and the governments of the world, they are increasingly seeing the risk of this idea of a money that isn't their own, that they can't control. And they're realizing that, oh, shoot, our ability to effectively tax and enforce anti-money laundering laws, et cetera, et cetera, et cetera, and to deplatform people, to debank people who we don't like, who have unpopular political opinions. They're increasingly waking up to this, and they're freaking out. They are, and it's only going to get worse as they keep paying for everything with inflation, monetizing all the debt and so on, right? And as banks continue to fail, safe and sound banks, according to them, safe and sound banks. So they're waking up to the fact that people have an alternative, and they're freaking out. That's the answer. And how should banks respond to this competitive landscape? Well, some banks want to embrace it. They want permission. Banks, they have to keep their license with their central bank, right? Commercial banks have to keep licenses with their central banks, right? It's a banking monopoly, and at least in the case of the U.S., every commercial bank has to be a partial member of the Fed branches, right? So, and if you want to start a new bank, you essentially need to go to the incumbent banks and say, "Hey, I want to compete against you. Can you give me a license?" I mean, think about that. So the traditional banks, on one hand, some of them would like to hold Bitcoin as custody or something, custodial services. There's one called Custodia Bank that was rejected by the Fed for a master account a couple months ago. And there's some others that just fear it, and they want to say no to every application. So they don't want to innovate. They don't want to have to innovate. I will say, having said all of this, Bitcoin's existence has forced the banking system to innovate in ways it didn't have to before. They have to, and the central banks as well. With Bitcoin, Bitcoin is 24 hours. I remember even in the U.S., the richest country in the world. It's not air quotes. It's literally that. But you go to banks and they're closed. Some of them close at 4 p.m. and you want to send money on a Friday, it won't get there till Monday or Tuesday. Right? What is this? Right? Bitcoin, when you send it, is when it goes. As soon as the miner scoops it up into the next block. Right? And part of the push, I believe, for a central bank digital currency is central banks' very centralized, very top-down way of trying to innovate to maintain some sort of relevance in this new world that we're in. Is they want to say no, like in Brazil, you have peaks, right? It's not a central bank digital currency, but as I understand it, you use your commercial bank to route a payment to someone else, and it goes through the central bank, right? So it's like halfway to CBDC, but it's not one, right? That's their way of innovating, right? The Bitcoin has forced them to innovate a bit.
Yeah.
Go ahead, Leonardo. You asked first.
Please go ahead. Go ahead, son. Go ahead.
No, I have a question there where how good is Bitcoin as a currency? Because I've heard, and this is my perception without being a person who studies Bitcoin, but my perception is that there's a transaction cost of having Bitcoin exchange like money. I couldn't go to a store and just like swipe my credit card and buy stuff on Bitcoin as easily and as safely as I would in the Bitcoin network. Is my perception true, or is it? Am I not thinking it through?
Sorry, say that again, please. Sorry.
So, how easy is it to do transactions with Bitcoin, and is it comparable to money, to fiat money? is there a transaction cost to actually doing the Bitcoin transaction?
First of all, there are transaction costs. That's the second way that I mentioned that miners get paid. So miners get paid, one, by solving these mathematical problems, which is essentially when they successfully mine Bitcoins. And the second is they scoop up a bunch of transactions, put it into a block, and those transactions, every one of those transactions comes with a transaction fee. So when I spend Bitcoin, I'm subsidizing the practice of mining Bitcoin. So there are fees. Again, you can, if you're willing to wait. It depends on how many people are trying to spend at the same time. If the pipes aren't clogged very much, to use an analogy, if there aren't a lot of people trying to spend at the same time, you should be able to spend very little. The lowest, and you don't spend as a percentage of the value that you send. That's key. If you use Wise or formerly TransferWise to send money, or PayPal or whatever, you pay a certain percentage, or maybe the receiver pays a percentage of the total value.
You can do international transactions.
Well, yeah, I guess if you're sending, at least if you're sending transact, I know both Wise and PayPal.
If I'm doing, like, how good would Bitcoin be to, like, replace the currency in Brazil, so that everybody in Brazil uses Bitcoin instead of the Brazilian real? Like, is that even possible?
Well, there's a lot that goes into that, including the political climate.
Let's say we figure out the political climate, and the government wants to implement Bitcoin. But would there be a transaction cost problem of making it very smooth to transact?
Well, if you wanted to do something like that, you'd have to go onto the second layer, like to Bitcoin's Lightning Network. So that's exactly how I would suggest it. Because Bitcoin does have transaction fees, often there's a lot of people trying to transact at the same time. So there's a high transaction fee if you want to get your transaction to go through within a reasonable amount of time. So the question is, I mean, that might work just fine if you're buying a car, but if you're buying a coffee, you don't want to pay a high transaction. You want to spend $5 in transaction fees to get to spend $5 for a coffee, right? Mm-hmm. Hello, right? So the way you do that is you move on to the second layer. So Bitcoin on the main layer, the blockchain, transactions being on the blockchain, that began in 2009. If I'm not mistaken, 2018, so 9 years later, is when finally we launched some version of Lightning Bitcoin. So what happens is people who own on-chain Bitcoin, that's Bitcoin existing on the blockchain, the master ledger, two people like you and me, you have your Bitcoins, I have my Bitcoins, and we lock up what's called a Lightning channel with one another. And then once we have a channel with one another, not only can I spend money with you, but I can spend money with anybody else that you hold a channel with, anybody else you're connected to, and you equally have access to everybody on my network and everybody who's connected to them as well, right? So two parties locking up their Bitcoins on-chain to one another on the Lightning Network. On the second layer, our funds, let's say you put in a half a Bitcoin, I put in a half a Bitcoin, so together we have one whole Bitcoin that moves to the second layer. Now we can send maybe not literally unlimited, but seemingly unlimited amount of transactions back and forth between each other using each other's network. Because again, I can spend through you, I can spend to everybody on your network, and vice versa. And we only have to settle the balances. If you want to settle the balance, you can close the Lightning channel and you just settle the balance. So it won't even reflect that we sent 1 million second layer transactions back and forth, and also people on our network back and forth used you and used me to route Lightning payments. In the end of the day, you just settle the balance, and none of that takes up any sort of it doesn't clog the pipes on the main Bitcoin blockchain. So that allows a scalability at an order of magnitude. On nation state level, this is what, by the way, this is what El Salvador did. You can spend on chain or off chain, the second layer Bitcoin, like Lightning Bitcoin, in El Salvador. They don't care which, but they very much promoted for the reason that I stated. They promoted Lightning Bitcoin.
Okay, cool. I'd like to make a question based on what we said until now and looking to the future. In your opinion, Emile, what opportunities and challenges do you see for Bitcoin in the future?
Yeah, good question. Opportunities for Bitcoin. I look forward to privacy improvements. If you transact with, if you want to transact with Bitcoin in a private way, there's a fair amount of learning you have to do, and increasingly, nation states aren't very happy about the fact that they exist or the fact that people do those. But here's the thing: is one way to transact with Bitcoin more privately, a lot more privately, is to move to Lightning Bitcoin. So if I send you, 500 Satoshis, which is a small amount of Bitcoin. Satoshi is the smallest denomination of Bitcoin. If I send you a very small amount of Bitcoin, it's nobody's business that I sent you 500 Satoshis. You're not a terrorist. I'm not a terrorist. Like, if you want some level of privacy, you just move move to the second layer. And here's the thing: is nation states are going to have a pretty hard time saying, you have no good reason to move to the main layer. Like you just want your privacy. You can say, I didn't even do it for privacy. I just did it because I want to transact instantaneously for near free. I want to get rid of the transaction fees so I can buy a coffee for $5 and it costs me $5 and some fraction of a cent rather than an extra $5 worth of Bitcoin. Essentially costs you $10 worth of Bitcoin, that kind of thing. So yeah, what am I excited about? Privacy improvements, and Lightning's not perfect in that regard, but it's improving. And what was the other one? Threats, was that the other one?
Is the opportunity and the threats, yes.
Okay, so I named one opportunity, threats. They're
not threats, challenges.
Challenges. Well, I don't mind the threats question. I'll answer that. Yeah, the threats is more regulatory, but here's the thing: is in the worst. I can't imagine a scenario in the worst regulatory scenario that would actually squash Bitcoin, that would actually be successful. Because there's, again, 16,000 something, and it's not even all the nodes. That's just the nodes that we can see at one time. 16,000 nodes, and a lot of those are over the Tor network, so we don't even know where they are. So good luck shutting those down. One way in which Bitcoin can be attacked is by the miners. The miners they're not only following a profit incentive, but they're keeping the network stable. They're doing that with proof of work. Secure. They're keeping the network secure through proof of work. I don't know if you know about proof of work, but I can break that down, and it's very interesting.
Give us a summary.
Okay.
Yeah.
So in the 90s, proof of work was used for the first time to impose real-world costs onto what people do with computing. So it was used to solve the spam problem. This is the first successful application of proof of work. Is a cryptographer named Adam Back had an email list, and his people in his on his email list were being spammed with denial of service attacks. You just send a bunch of emails like 1,000 times, and every time they send it to the address, like all his recipients on the mailing list get that many emails. If you send out 10,000, all his recipients receive 10,000. So what he did was he developed again a way to push real world costs onto computer networks. And he did that by, if you want to send an email to his email list, your computer, the sending computer, had to solve a mathematical problem. So, and it costs real money in real life because the problem was difficult enough that the computer needs to use more electricity, and the computer gets hot, like the fan gets going. It uses CPU power to solve the mathematical problem because the problem is difficult enough. It needs to sort of brute force it. So that's how Bitcoin mining works. It discourages. It puts a real world cost on people who would abuse the network. And so one threat to Bitcoin is by going after the miners. But here's the thing, it's a cat and mouse game. If the U.S. or China already did, China made it illegal to mine there, and what did it do? What did they do? The miners, it moved the hashing power to the U.S., and now the U.S. gets to dominate that space. New York wants to be hostile, probably California too, hostile towards Bitcoin mining. It pushes the hashing power to Texas and Wyoming and anywhere else where it's less hostile. And the Biden administration really wants to tax in different ways. Wants to tax Bitcoin miners, and okay, they're just ensuring that Kazakhstan and Russia, the U.S. fears Russia. It makes it so America's enemies in the world get to have a competitive advantage, an artificial one that the U.S. government would create all by itself by discouraging it. So good luck.
Would you say it's there's an analogy to how the government tries to break down the drug cartels, in the sense that once you get a smuggler,
whack-a-mole,
drug dealer, it opens an incentive for another one to come out, because it's another opportunity for a market that wasn't there. At the same time, if there are less miners, it becomes easier to mine, so therefore more people are incentivized to come in, right? Is that how it would work?
Exactly that. If you shut down a bunch of miners, there's something called the difficulty adjustment. If you shut down a bunch of miners, at least temporarily, it pushes the hashing power down. There aren't as much people that are hashing to the same rate. Hashing is attempts to solve the mathematical problem that I mentioned, and the extent to which the number of attempts to solve the mathematical problem per unit of time is what we call the hash rate. Right. So if a bunch of miners go offline, then yes, it temporarily creates a profit opportunity to miners that are able to stay in business, just as long as their electrical costs aren't too high, because that's part of the equation, of course. But then there's the difficulty adjustment. If the Bitcoin network. This is kind of like airplanes, by the way. If the airplane's going too far one way and like the wind's bringing, I've heard at least there's some adjustment. It's like it brings it back to level. Similarly, Bitcoin has one in the difficulty adjustment. So if a bunch of miners go offline, yes, temporarily for about 2 weeks. There's a point in which Bitcoin remains at the same difficulty level. And so you can successfully mine Bitcoins for the rest of those 2 weeks, and then then it adjusts. It becomes more difficult, or rather, so it adjusts accordingly. So it's not, you can't just maintain that easy Bitcoins forever kind of thing. But anyway,
interesting. Yeah. Oh, great. We're closing down here in 1 hour of live already. Leonardo, would you have any closing remarks for closing questions for Emile?
Well, Emile, I think that as a Bitcoin investor, you convinced me to keep investing in Bitcoins, maybe increase my because I truly agree with you. I didn't have this. I'm glad that you shared your knowledge with me. That and I agree with you that Bitcoin, it is an alternative for the traditional currency, and I like so much to. I don't have any takeaway points, but just to thank you for sharing your knowledge. As I mentioned before, in 2001, I paid a private course to invest in Bitcoin, and not Bitcoin, in cryptocurrency, not Bitcoin. It's completely different now, and I know it. But as we talk only about Bitcoins, all my investment is in Bitcoin today, and I'll keep investing. And thank you so much for sharing your knowledge.
No problem. Happy to be here. If I have one little thing that I throw in, I think that nation state adoption will be a big thing over the next couple of years, especially with inflation. And there's you hear de-dollarization everywhere. It's really hard to get off the network effect of an existing currency, right? So one way to go about doing it is kind of like what El Salvador does, where you don't get off the dollar or you don't stop using it for international trade, at least, but you also allow Bitcoin to some extent. Either you actually you accept it as a legal tender, where El Salvador, for example, has dual legal tender, the dollar and Bitcoin. Or like I said, or you can just say, okay, no capital gains tax, and and you can use it all you want, right? So there's another way. So as de-dollarization keeps going, nation state adoption, I think, will be increasingly a big thing. Yeah.
Especially in smaller states where it's easier to.
That's right. Especially the ones that are tired of being bullied around from the IMF historically, So, yeah.
And would you just give us a quick advice for our audience who's watching us on what should we be careful about when people are selling courses on cryptocurrencies or Bitcoin, so that you wouldn't fall in the same trap as Leonardo?
Yeah, I would highly recommend taking Bitcoin specifically seriously. You can look at the others, no problem, but look at the points of centralization, and they'll just know that just because they say they're decentralized, first of all, there's not just centralized and decentralized. Right? Like there's degrees of centralization and decentralization, right? It's sort of a scale. Most of them are saying they're decentralized, but careful. I would lock yourself in your room for a weekend and just study Bitcoin specifically, and you'll find out that weekend turns into 6 months, and then 8 years later, you're just walking around recruiting all your friends. Anybody who will listen to you and who they're not just going to freak out when the price goes down a little bit in a few months. You'll be telling people, look, man, you've got some money in savings. So Bitcoin is volatile, but if you look at a linear trend line over time, it goes up, and there's a reason, because it's got a fixed supply in it. And it solves a bunch of problems that it solves real world problems, right? So it's highly volatile, but goes up over time. Where if you're just keeping, if you're relying on your fiat currency, whether it be Brazilian reais or dollars, just notice that those currencies have only ever gone down, ever. So anytime someone says, "Oh, but it's volatile," like, okay, so that discourages me using it as a medium of exchange, because the price of coffee today isn't the same as it was yesterday. So I agree but if at least you want to use it for a store of value, Bitcoin's value proposition is absolutely enormous. Yeah.
Any book recommendations or place to start?
Yes.
If people are looking for Bitcoin, study Bitcoin?
Yes, there are the two books by, his name is Saifedian Ammous. One is called The Bitcoin Standard. The other is called The Fiat Standard. Right? There's a lot of books on cryptocurrencies. I've read some of those too. Mostly trash. And don't just read any book about Bitcoin either. There's a lot of books about Bitcoin that are just like really, but I would recommend learning about money, not just Bitcoin. Learn about money, how money works. This is where the Austrians, without Austrian economics, you don't have Bitcoin. That's a whole conversation we didn't get into, but we know. Another episode. Study sound money. You can read Hayek, you can read Mises, you can read Rothbard, and Saifedian Ammous. He's not just a Bitcoiner; he's a really brilliant economist. So the book, The Bitcoin Standard, and the Fiat Standard. These are two of his. He's just got a brand new third book that I haven't read. But these are economics books. They teach you about money, and they show you how Bitcoin is the soundest money that has ever existed in history.
Awesome. We write that in the comments on the description of the video, wherever you're watching us.
Yeah.
And thank you very much, everyone who watched us today. Thank you, Leonardo. Thank you so much, Emile, for being with us.
Thank you very much. It was my pleasure.
And we'll see you next time.
See you. Bye-bye.
Bye-bye.